AMC, AAMC, AMC. You're watching AMC with your friendly neighborhood Andrew, Mo Money, and Meatball the Professor. If you guys want Jamie content, I just released one, and you should go down to the comments and say how much you love both stocks, because apes do not fight apes. AMC friends, look at extra money we are playing with. Thanks to the house, this extra boost out of the downtrend we are seeing. I'll show you guys in a second, but this downtrend I've shown a couple of times already from January squeeze. Anything above that, the part I circled in blue, that price action is from the house itself. Thank you, Hedgies, so much for being able to give us that extra boost, because once we retook 61.8% retracement over on Thursday, after hours, might I say, that was humongous, right? So when we took 1580, that was a chance for us to be able to top off and create a new level of resistance. So if you guys want to be able to understand what you need to know for Monday, well, you're 1 minute into this video and you should stick until the end. Give this video up to 1,300 likes, and if it isn't quite there yet, comment out which like you are, and here we go. So one of the first things that you'll notice is that we've been struggling with that 1280 level of resistance for much of the past few days, and this is okay, right? This is still free money that we're playing with, because this downtrend here from the January squeeze is giving us a sign that any amount of breaking out gives AMC a chance to be able to retake 1450. That's a big number that we need to be able to once again break, because let me just make as many arrows as I can. That's a 61.8% retracement we broke above last Thursday. And so when we're talking about whether or not analysts are bullish, that is, once again, perception is queen, right? Data might be king. We want to be able to understand that these patterns are giving us a run for it, the hedge funds money, but we also want to be able to understand what other people say, whether it's FUD or fiction. That you can hashtag. Let's see what David Saito Chung says, and I'm sure he might have a very similar conclusion about that 1450 price point. So going to the movies is exciting, but it can't match the action by AMC. Now that's true, fair enough. That's corny, but I like it. Starting the year at just $2 a share, AMC stock skyrocketed tenfold by the final days of January, peaking at $20.36 on January 27th. Shares in the movie theater chain soared over 940% from its coronavirus bear market low of $195 back in March of 2020, and from its 2021 low of 191. Can you imagine? Just take a second, right? Pull your favorite drink of choice close to you and think, this Sunday, this beautiful day is brought to you by the AMC price action, because that is huge. And the stock had 8 straight days of growth following Monday's 7% blast in above average volume. And that is all we can say, because after Monday, we have had a couple of red days, very minor compared to the crazy rip that we've had in the last 8 days. Earlier this year, WallStreetBets chat room traders on Reddit joined in unison to buy shares of AMC stock. They did the same in a band of other companies that have been heavily sold short and struggling. And actually, there is an article about the top 10 stocks that currently Redditors are trying to push. And I'm not sure if you'll find AMC or GME on there. Maybe, if you guys want to be able for me to cover that video, I just might just drop that in the comments and let me know if you want to see that. Earlier this year, okay, so we saw that. If you were watching or trading GameStop, you were likely also keeping close tabs on AMC, and you would be richer for it. When a stock shows a high level of short interest and is getting bid up, you can almost count on a chain reaction of buying to occur. That's the coerced buying here. Why? Short sellers betting on a decline of the stock often are about to do a about face. They cover their short position by buying back shares. It is necessary. It's a necessity. According to data analyzed by MarketSmith, the amount of short interest or shares sold short by individual and professional investors has jumped 10% in recent weeks to 1.1 times AMC stock's daily average volume of 74.9 million shares, or roughly 82 million shares. That's equivalent to 19% of the stock's entire float. Huge. In a nutshell, short sellers are still betting big on a future decline. Yet since January, AMC stock has followed an extreme zigzag pattern. Now that said, we already just heard that they want to put 19. That's the official number, right? Not counting any FTDs or naked shares. Let's take a look at Ortex. That number is a little bit lower over here for our favorite scanner. If you want to see yourself, that Ortex link is in the description below. But look, 15.28%. getting up there. It's finally rising. It's been rising day on day after a slow bleed over the last week or so when we saw those margin calls and we saw the market inversely react to AMC's upward price action. So that is one of the only signs that we can say in terms of a guarantee for those margin calls. It's a good sign that gods do bleed. Just 2 weeks after 2036 peak, AMC crashed. Shares fell as low as 5.26. Then came a huge second wave of buying, setting shares back to the teens. Week to week, the mid-cap stock with a market value of $6.3 billion, 450 million shares outstanding, and a float of 441 million has lately seen its overall price range narrow. That's good. A new base is forming. This story examines the fundamental, technical, and fund ownership. Right now, you guys have a pretty good background in case you guys needed it. If you guys didn't, welcome to the part of the show that tells you, will AMC stock rebound? Without a doubt, investors long in AMC are betting on turnaround in fortunes. In 2020, AMC lost a ton a share. Over the past 5 quarters, the company's sales have shrunk 22%, as much as 99%, 22 to 99 versus a year ago levels. But as movie theaters open across the country, and CDC is telling you, very soon we might be able to watch a movie without our masks on, Wall Street is banking on a tremendous rebound in the top line. Analysts polled by FactSet offer a consensus estimate of 378 million in second quarter sales, up 1,900% from a minuscule 18 million. So think about this, the price action, right? Fundamentally, it doesn't have to reflect the amount of money the company makes, but if you saw no change, basically, like roughly no change, but they are not only getting extra money with those at the market offerings, but also expected to see 2,000% of additional second quarter sales. All you can say is, god dang, what will happen to the price action now? Bullish AF, that's what we're talking about here. Wall Street expects net losses of $3.40 a share for 2021, a far cry from the unadjusted $39.15 it lost last year. On May 13th, AMC announced it will complete an at-the-market equity program launched on April 29th, and that was when we skyrocketed 35% that day at its peak. Key IBD ratings. Last time AMC paid a dividend came on March 23rd, 2020 at 3 cents per common share. If the company were to resume this cash payout, shareholders could attain an annualized 0.9% yield at the current price near 14 a share. For now, AMC scores poorly in the IBD's proprietary ratings. That's the good news and the bad news. Take that away from the FUD versus the fiction. Here it is. Headed into Monday's tradings, they include 23 earnings per share rating. Right, this is the fundamentals. Understand that you have to be able to take that in consideration with everything that we've known about not only the short position, but as well as the patterns that we expect. AMC stock forecast. When choosing growth stocks for your biggest potential gains on the CAN's SLIM's Can Slim investment paradigm, your chances of finding a true market leader improve when you focus on those with a composite rating of 90 or higher. So, however, given AMC stock is a turnaround play, it makes more sense to place more emphasis on relative strength. A 98 relative strength on a scale of 1 to 99 means that the company has outperformed 98% of all stocks in the IBD database. Strong long-term performance? Indeed. We've always talked about AMC from the beginning of this channel as the better long-term play, and now analysts all across the world are coming around. So actually, let's just skip once more to the RS line drawn in blue, compares a stock or ETF's moves versus the S&P 500. When a stock breaks out of a new base, prefer to see the RS line also running to new high ground. This strongly suggests that the stock is now outperforming the general market, right? You put your money in some ETFs, some S&P 500s, you can see some pretty not gnarly rips. And here is the opportunity for AMC to prove everyone wrong. At this point, AMC has created a boxy cup-like base over the past 8 weeks. That's plenty of time for a solid cup pattern to form. This pattern produces a proper buy point of 10 cents above the cup's left side peak. And so in AMC stock's case, this correct entry stands at $14.64. Yes! That's what we're talking about. Just go back to the beginning of the video and see that $14.58 level of retracement. That's just 6 cents off of this article's guess. So conclusion, is it a buy now? While AMC stock is up this big this week, it has to surpass 1464, becoming a brand new buy. So that's the price level to pay attention to. Cup and Handle coming to you soon. If you guys want Cup and Handle merch, let me know in the comments and we'll add it to andrewmomoney.com, which is our merch store. Go check it out. We have a lot of 15% off sales right now in anticipation for 90,000 subscribers. We'll do a swag giveaway. So once again, thank you guys so much for those of you who come tune in, have some fun, chill with us with a coffee or two on your Sundays, and during the weekdays we are going to be streaming for after hours, so I hope you guys have turned on your bell. I'll see you there. For now, but not for forever, have an excellent Sunday, and we'll see you in the money. Peace.